Welcome to the show designed to give you crypto confidence. Created by the marketing communications specialists at Blocksparks, we want to help you learn about cryptocurrency and blockchain in a safe and friendly place. Because we believe this stuff is far too exciting to leave it to the geeks. Come and join us to learn more. Hello, you're listening to the Crypto Confidence podcast. And if you're joining us for the first time, it's great to have you with us. And welcome back to our regular listeners. If you've been with us for a little while, then you'll know we talk a lot about some of the challenges and implications of managing your cryptocurrencies and holding them securely. But it is important to understand there are alternatives to direct investment and holding your own keys, and there exists a growing range of funds and managed products which provide other opportunities. To discuss this today, we're very pleased to be joined by Veronica Mihai, who is the founding partner and head of investor relations at Bloomwater Capital. Welcome, Veronica.
Thank you for having me, Maya. It's an honor to be on your podcast and looking forward for the conversation.
Oh, me too, very much so. So please, would you start by telling us a little bit about yourself and your journey into this magical world of crypto and blockchain?
My journey into crypto and blockchain started roughly about 5 years ago with a general interest in Bitcoin, as it was pretty much in the news. I missed the early train, let's call it that way, like many of us did.
Oh,
However, in my household at that time, Bitcoin became quite a topic of conversation and debates, and around not only Bitcoin itself as an investment or speculation tool, but also decentralization and blockchain in general.
You have interesting conversations in your household. These don't happen in mine.
We do. And we tend to include our children as well. So
excellent.
And after that, we started, alongside. I started alongside my general business. I used to have a business in IT management consulting here in London. I've been based in London for the past 10 years. Mm-hmm. And alongside that, I started developing interest in blockchain and Bitcoin and started buying small amounts here and there. After that, it became pretty profitable for me to consider it even more. Then I've started investing in early ICOs and developed a network in London and also globally through the usual channels that we know, like Telegram and other channels. And I've even dipped my toes into mining. And as a result of that, I've opened a cryptocurrency mining operation in the UK and China, which went quite well, especially in the first year, to be honest with you. But it wasn't the main focus of my business. It was more as an income, as also an experiment and as a learning curve.
Of course, yeah. I think it's probably a really good way to get hands-on with the technology and understand it in depth. It's not something I've dabbled in personally other than cloud-based, so that's fascinating. We might have to have another conversation about that one day.
I wouldn't say that I am extremely technical, but what I tried to do is to challenge myself and at least understand the concepts and how things work, or how much can I push myself into doing something in that field, whether it's mining, cryptocurrency, or trading, investment management, and so on. I like to challenge myself. I sometimes tell myself, if I have to do this, I have to try this or the other, because I like learning, and I feel that if we don't evolve, if we don't invest in ourselves, we kind of become stationary.
Fantastic. You're a woman after my own heart, another Renaissance soul. I think nothing interesting happens in the comfort zone, right?
Exactly. It's not easy, because it's not easy to push your boundaries and go out of your comfort zone, but I guess one has to do it.
So rewarding, right? And that's so much more interesting. Yeah, fantastic. People either get that or they don't. So it's so wonderful to hear you express it so clearly, exactly how I feel about life and technology and everything else. That's great. And you've also done a lot to speak up for getting women involved in blockchain and other projects, haven't you? I know that's where I first came across your work.
That's true. I've met a small group of wonderful women actually on a Telegram community channel, and we took it from there, and we grew up. We grew the community. It's called Women in Blockchain International, and we grew up the community to up to right now about 650 women.
Fantastic.
At all levels. So practically, you can say some are consultants, lawyers, founders, advisors, or developers, all levels really.
It's an amazing community. I think it's great to bring women together in this space, which is still male dominated, let's face it.
Yes, it is. And I think it's important that we, not just because we are feminist or anything like that, but, just like guys support them, each other, and they create opportunities for each other, or, just think of a job when somebody apply, when there is a job opening, what happens in a company is, I am aware of that job opening. I'll call my friends and say, hey, are you looking for something? There is an opening. So it's pretty much sharing opportunities, sharing educational materials, and highlighting each other as much as possible, and making sure that we attend events and that we get maybe discounts sometimes, and some of us get to be speakers and we can get some tickets and share it with other women, and so on. So whatever exposure we can get and however we can support each other, I think that's great.
That's brilliant. And it is the only way to break down those boundaries, which simply come along structurally, not because people are deliberately trying to discriminate in many cases, but simply because, exactly as you said, people tend to know people who are like them, and therefore they recruit and network in their own image a lot of the time.
Yes.
And,
Yes.
to deliberately unpick that is really important and interesting. And that leads us beautifully into, please tell us a bit more about Bloomwater Capital then. Tell us about your business and what you do for your clients.
Bloomwater Capital was started 11 months ago, and it has been quite a journey so far. In a few words, Bloomwater Capital is a hedge fund that was born as an alternative to mitigate the limitations and challenges present in the digital asset market right now.
Okay, so let's start by what is a hedge fund, very briefly, for anyone who's unclear on that.
Sure. So a hedge fund, if we look at, first of all, at the word hedge, it's practically saying that you're trying to diversify. You want to have an investment portfolio, and you want to diversify your investments so that you hedge your risk. So it's like an old saying which says, don't keep your eggs in one basket. So in this case, it's like that. It's a bit like that. A hedge fund, it's a fund that takes investors' money, in this case, accredited investors who want to have exposure, in this case, to cryptocurrency and digital assets. And but they don't want to take the hassle of doing it themselves. In some cases, maybe they're not necessarily specialized in this market. And you have family offices, for example, that they have a portfolio, they have an amount of money, and they want to invest in stocks, in bonds, and all sorts of other options. And for cryptocurrency and digital assets can be an option for them. So
family offices, that's people who are managing funds on behalf of wealthy families and people who've acquired assets over generations. Is that right?
So, yes, that's right. And a hedge fund, especially a regulated one such as mine, is a main target is family offices, accredited investors, high net worth individuals, and institutions, because they have, maybe a better, let's say, they have a different type of risk appetite, and they have a better understanding of investments.
Of course. And obviously it's a very speculative asset class. We all recognise that. I also recognise that you have to be very careful in terms of how you talk about your fund because of the restrictions and regulations around that. Could you explain to us who you are allowed to talk to? Who is an accredited or qualified investor in your kind of fund as an individual rather than an institution like a family office?
So an accredited investor will be someone who has liquid assets over $250,000,
right?
Or at least an income or it depends really on jurisdiction. Some jurisdictions keep it to 250,000, other jurisdictions says 2 million, and I think US is on the stricter side of things.
Yeah.
Where I believe you have to have 2 million in assets, and you have to have, let's say, the past 2 years a certain level of income, and that's what it's considered an accredited investor.
Okay, and that's specifically to protect people from exposure to what sort of risky investments generally, is it?
Yes, that's correct.
Okay, no, that makes a certain amount of sense. Though, obviously, in terms of the broader crypto scene, regulation is something that's changing very fast, I suppose.
Yes, it is, and although, for example, we are domiciled in British Virgin Islands, most of our team is in London. However, we've chosen British Virgin Islands as our company's domicile, and we are regulated by and under the jurisdiction of the Financial Services Committee in BVI. Now, what that means is that, for example, right now we have limitations in terms of onboarding US investors, and we had to have a fund administrator which is based in Europe. We also decided, in a way, we kind of self-imposed certain standards, because we looked at what would an investor want if they want peace of mind for their investment. So we looked at, what are the pain points? So one major pain point right now is regulation. So that's something that we have done. Then another pain point is custody. So we partnered with a third-party custodian just to ensure that our digital assets are safe, and we don't run into situations like the ones that we've seen in the news recently, where the keys are lost. Yes, yeah. Exactly. And the other pain point is auditing. A lot of funds or a lot of exchanges, for example, are not necessarily, and the institutions that operate in the cryptocurrency space are not necessarily as transparent as I believe, and as we believe in Bloomwater Capital, that they should be, which means there should be an audit trail. You should see performance. You should be able to see reports, quarterly reports, and so on. Why? Because this is what gives investors, that confidence that you are doing the right thing, and that, besides profits, because anyone can come and say, I have this magic formula and I'm going to deliver this much profit, and it can sound magical and wonderful.
Just give me your money.
Yes, exactly. But ultimately, you have to give some level of confidence that you know what you're doing, and also that you are secure from many points of view.
Absolutely. That makes so much sense, especially because a lot of these problems with custody could actually be mitigated by better transparency about the auditing and proof of keys and things like that. All kind of part of the whole picture of offering a transparent and secure service, I guess.
Yes, exactly.
Fantastic. So. Okay, well, Veronica, I'm not an accredited investor. I'm never going to meet those qualification thresholds. If talking to me as a podcaster and a writer with my kind of asset level, if I wanted to get exposed to cryptocurrencies and digital assets, but without actually buying them and holding them, what kind of options exist for me at the moment?
Right now, the options that exist are futures and indexes. I know that at least I know one platform that is trying to offer or is offering options, but I don't believe that cryptocurrency market is ready for options right now. Mainly, personally, it's a personal opinion. I feel that there is a lot of volatility. Also, we have a downside, let's call it. We have less data. If you think about it, we have data in terms of Bitcoin, trading Bitcoin for the past, I don't know how many, let's say 9 years, but highly more, higher volumes of trade maybe in the past 2 years.
Yes.
Many of the other assets are not even that old as Bitcoin. So you have data for half a year, 1 year, maybe less than that. Now, you can't build what kind of credibility you have if you build an option or if you sell an option of a highly volatile asset. It's going to be very tricky. And if people for example, like yourself or any other retail investors, if they don't understand how an option works, then it becomes quite risky.
Yeah. Okay.
Futures tend to be more straightforward. And so if you ask me from a personal point of view, I'm not talking here on behalf of my company.
No, understood.
And this is not,
we don't give financial advice on this podcast at all.
This is not financial advice. No, this is purely my personal opinion that futures and indexes are probably the best way to get exposure to cryptocurrency and digital assets for retail investors.
Okay.
And if we look at indexes, what are they doing really? They give you an index. It's a list of, for example, there is an exchange or a company that offers a bundle. They bundle up, let's say, top 10 cryptocurrencies, and then they take a certain percentage for each. For example, usually indexes have like 70% are made up of Bitcoin, and then decreasingly go to other, less volatile cryptocurrencies
sort of
or digital
or
assets.
Top 20 market
exactly.
Cap, aren't they,
mainly, yes, weighted by market cap. And an issue with that is, and where I think that retail investors should be careful, if you ask me, is there is not much regulation around it, and that's an issue. Why? Because we have to ask ourselves, what guarantee do we have that the company that we are buying the index from or the future from is actually buying the crypto? So in case of indexes, is actually buying and holding the cryptocurrency or asset. We have to again go back to the audit, what we were talking about earlier. Yes. Audit of the index, is that what is it on a quarterly basis, monthly basis? Also rebalancing. How is rebalancing done? Because we both know, and I'm sure that most of the audience knows as well, that the top 20 doesn't stay top 20 for long.
It's changing all the time, isn't it?
It's changing all the time. So there will be platforms like, for example, Like, that has LYCI crypto index. Now they are doing, it's not a very well-known one, but they are doing a rebalancing. They actually have an automated system that is doing rebalancing on a minute-by-minute basis.
Wow,
which
okay.
is, which is, it's quite, if you ask me, it's quite interesting. I mean, you get that. Otherwise, other companies usually offer a rebalancing every 2 weeks or every month.
Yeah, that's more traditional, isn't it? But I suppose in an asset class where the top 10 assets, things can literally drop in and out of that top 10 list on a daily basis. It is quite unique, I suppose, in terms of how to approach it. It's interesting to see what different service providers are doing to try and balance that. Do you think that the emergence of derivatives like the Chicago Mercantile have actually helped stabilize the Bitcoin price at all? Do you think that they have helped reduce the volatility at all?
What I believe is that the emergence of derivatives and options and so on, they are going to help reducing bad actors on the scene and stabilize the market a little bit. And also, as more institutional investors get involved and start actually, let's call it placing bets in the market, just for the fun. But yeah, you know what I mean. On a serious note, as much as they start putting a portion of their investment portfolios into these kind of products, yes, it will stabilize. And not only Bitcoin, but probably, let's say maybe top 5, because I don't think that institutions will go, at least in the, let's say this year, that will go further than top 5 or top 10 right now.
Right. Okay. I mean, I think everybody agrees that we're going to see some significant changes this year in the regulatory framework globally, and also in new products and funds coming to market. What do you think is the most exciting things we're looking out for in 2019?
The most exciting things, I think options market, a structured product market, ETFs, a more robust futures platforms,
Right.
institutions getting into the market where they can hedge their risk.
Mm-hmm.
And also, I think Bitcoin's total addressable market will significantly increase due to the realization of its underlying protocol services, such as Lightning.
Uh-huh.
I think Lightning is doing great.
Yeah, we want
A
to
great
find a
job right
guest to
now.
come and talk to us about the Lightning Network soon, I think, because that's so exciting and really changes the game completely for short-term payments. I
Yes.
think the thing about ETFs, exchange traded funds, there's been a lot of buzz about that for a while, but we still haven't got one. What do you think's going to happen there? What's going to be the first success?
Opinions are split. Some, if you look at news, or if you look at the fact that last year Gemini's ETF's proposal was rejected, and if you look at other, what is happening right now, opinions are pretty much split. Some consider that it's not the right time, and that BTC doesn't have the maturity or the stability to make ETF successful investments.
Right.
Others, however, consider that this is the right time. And if you look at Bitcoin, although let's say it dropped this year, but we did. I think one difficulty is when you look at Bitcoin, people tend to always compare with the highest position that it held last year, 2 years ago, actually.
Yeah.
And I feel that that's slightly wrong. And why I feel that is, okay, you have to take year on year and you compare apples with apples, not pears with apples, because everybody thinks, Bitcoin went down so much, and what happened? Of course, it went down from the 19,000 or 20,000 that was there for how long? For a day?
Yeah, I mean, that was an anomaly, wasn't it? That's
Exactly.
all-time high. What
Exactly.
was about 14 months ago. We have to stop looking at that.
Exactly. We have to stop looking at that. We have to look a little bit longer, or at least like taking last year this time or 2 years ago this time with what is happening right now. And then we will see that it's not that dramatic as it looks. So, yeah, what will happen to ETFs? Oh, well, I'm not a wizard. I don't really know, but I hope that they will eventually come in the market as an alternative investment mechanism.
So longer term then, what do you think we're looking forward to? More products, more derivative instruments and ways for people to get exposure and involvement to crypto?
Yes, I believe so. I also hope more education, because it's important that people know what they're doing, or at least that they understand a little bit how this market works, and not only how this market, but what investment management is. And I think it's quite exciting. One interesting statistics will show you, if you look at reports, it will show you that, for example, women are less, they tend to invest less, not only in cryptocurrencies, but in general. So they are less familiar with financial products or other investment instruments out there. So I think education is important, not for women only, but for everybody.
For everybody, I completely agree. I mean, well, that's the reason we started this podcast. And so you're part of it now, bringing that greater enlightenment and understanding. And we do prioritize female speakers and interviewees on this podcast, partly to redress that balance, along with the work you're doing in Women in Blockchain International, just to bring more female voices out. But I think general financial literacy is something that we're poor at as a community generally, and that women probably have more of a way to catch up, particularly women who are maybe approaching pension age and finding that their pension age is being extended and they have to work longer, or they're underpensioned and so on. It's so important that we understand what's going on financially and what our choices are.
Exactly. We have to have options, and we have to explore those options. Risks are everywhere, and I understand that, sometimes women are classified as more risk averse. I think that if there was a better education and better exposure to what investment really means and how you can take advantage in a very controlled way and without getting ripped off or scammed or whatever, then that can only be averted through education.
Absolutely. And I tend to call out this idea that women don't get involved in cryptos because of risk aversion. I think it's far more socially constructed than that. And it's got a lot more to do with institutional discrimination and the kinds of communities where these things get discussed and the barriers that exist there. You can't blame it all on risk aversion.
No.
It's
It has
just
to
too
do
simple.
exactly, and it has to do also with access to the kind of capital.
Yes.
But ultimately, with even if you start with a small amount as a and it's still a start, of course, something that you can afford, not something that will put you into debt or
Yes.
that will get you into trouble. So no, I would never advise that kind of risk.
Of course not. And yeah, as I say, we don't give financial
We don't
or
give
investment
advice.
advice. There'd be a long disclaimer tapped on at the end of the recording, so don't worry about that. But definitely, if we were giving advice, we would always say start with something you can afford to lose completely,
Yes.
and just find out, get stuck in, have a go. We're producing lots of content about how to just buy your first little bit of crypto on an exchange and then what you can do with it after if you want to. So it really is a case of taking that first step. And there's lots of us here in the community who are ready to hold your hand and help you do that in a safe way on a safe exchange, not the ones that make the headlines in the mainstream media for losing all their assets and keys or whatever other horror stories. There are safe ways to do this, aren't there?
Yes, that's right. But with regards to the horror stories that you see outside, I think what we hear less, and people get scared also because you don't really hear what is happening in traditional markets. You don't really hear about the horror stories there. You don't hear of the cost of hacking in banking, for example, every year, which tends to be quite high.
Very
and it's
true.
increasing.
Yes.
So people don't have that kind of exposure to this type of information. So they tend to get quite scared of cryptocurrency, especially since it's something new.
And all they hear about are the hacks and the high-profile breaches.
Exactly.
Whereas, actually, when you think about it, I bet everybody listening to this, if it hasn't happened to them, they know somebody who's had some irregularity on their bank accounts, had a payment that's gone through that they didn't approve of or whatever, something that they've had to query, a fraudulent payment. And I bet you the bank has just dealt with it and made it go away, never given them any explanation as to how the breach occurred, because they can't. And it's never made headlines either. And yet this is happening every day to everybody.
Absolutely. I totally agree with you. This is happening on a daily basis. This is something that it's really kept quiet about. There are not many. I mean, if you want to have that kind of information, you have to go to, let's say, the big auditors out there, and you have to look at their reports. And when you see their reports, but how many people are going to do that? However, that's where you can find actually how much it costs us. And also something that people do not understand is, and even myself, I didn't know until I started reading about it, to be honest. And what we don't know is that all those costs, most of the times are trickled down to us, the bank account holders. So through little taxes and fees and so on that we don't know why
our
they
free banking
come
costs us a lot.
Our free banking. Exactly. It's not exactly free. Now all of these things are not exposed, and we are. And one other thing is human nature. We're not very open to change, and that's, I guess, in our genes. True. And we are very much used to using traditional financial markets.
Yes.
It doesn't mean that they are strong. It just means that we are used to it.
What's
it's a risk that we are willing
safe,
to take.
Isn't it? Yeah, I think
exactly.
so. And it's really strange, given what we all went through 10 years ago, how much we seem to trust banks still.
Yes. And if we go to that, if we look, for example, let's take ETFs. 10 years ago, 70% of the ETFs were without a bid. So it's a product that was quite popular, but however, there was no one buying them or bidding for them. And this is an alternative product, just like we're trying to do with crypto. As I said, a crypto world and in blockchain industry and so on is 10 years old.
Yes.
And many of the coins don't have a history. Crypto and traditional markets are very similar. It's just that crypto is young.
Yes, and that's a really interesting perspective to think of ETFs being really innovative a decade ago, and now where people are fighting to have an ETF accepted for crypto on the basis that that's a route into something really well established and well known and understood.
Yes.
So that shows how the perspective can change so radically in this space. And 10 years isn't a long time.
No, it's not.
But it's
So
a
we
very
still
long
have to
time in
grow.
crypto.
It is a very long time in crypto. It's quite funny when you tell someone, "Oh, I've been doing, something or the other in crypto for about 5 years," and they're like, "Oh, wow, that's
Yeah,
that's
you're a
like
real
a."
OG. Because I think crypto years you have to count as dog years, somebody told me recently. So that's a very long time.
Yes,
Fantastic.
indeed.
Well, all we can say for sure is that the next 5 years are going to be even more interesting and exciting for all of us. I'm sure it's going to be very exciting for Bloomwater Capital and for yourself. We will put all of your contact information in the show notes, but if people are just listening and want to make a note of it, what's the best way for people to get in touch with you and find out more about what you do?
They can always contact me through my LinkedIn page, which is just Veronica Mihai Das. And otherwise, I'm on Twitter as Alina Vero and all of these, although maybe my accent will not sound very well when I pronounce them, but they will
We'll
be, as you
put it
said, on
all
your,
in writing as well, because I want to keep in
just
touch.
email me at vero@bloomwater.com.
Perfect. Okay, that's brilliant. Well, thank you very much for coming on the Crypto Confidence Show. It's been a fascinating conversation. I'm sure our listeners are going to really enjoy it as well. Really appreciate you taking the time.
Thank you so much, Maya, for having me, and it was a real pleasure and an interesting conversation. And I'm always happy to do my little part to educate or even be educated.
Fantastic. L is for the Lightning Network. The Lightning Network is a payment protocol that works as a second layer on top of a blockchain. This kind of architecture is proposed as a fix to the scaling problems of Bitcoin and other cryptocurrencies. And like so much of the online world, it represents a trade-off of user experience against security. But it addresses one of the most fundamental problems with the Bitcoin network in particular, the lengthy confirmation times and transaction fees, which make it infeasible to use for the settlement of small amounts, and indeed obstruct it from acting as a day-to-day means of exchange, in other words, money. The Lightning Network sits on top of the blockchain. It works by opening a payment channel and setting up a multi-signature wallet which holds some mutually agreed amount of cryptocurrency to act as a credit limit, and a corresponding savings wallet address in the blockchain. Via this payment channel, parties to it can make an unlimited amount of transactions up to this limit, and those transactions are not written to the blockchain itself. Then, after all the planned transactions are completed, the resulting balance is saved in the blockchain and parties can recover their netted off share of the wallet balance. One way to think about it is like setting up a tab at a hotel or in a bar. You might leave your credit card at the bar or it gets pre-authorized. That's your funding of the wallet. Then throughout the night you can order freely against this agreement, which won't actually be charged until you see your final bill at the end of it. Now when you go out, you might not know exactly how much you and your friends are planning to consume in advance, but you have an idea of the maximum bill you're prepared to pick up, so that's what you agree in advance with the bartender. They then keep the drinks flowing, but without opening the till each time. Instead, they keep a separate note of it as a tab, taking account of any discounts, refunds, payments chipped in by your drinking companions, and so on. At the end of the evening, the final bill gets rung up after it's all added up and agreed, and then it's charged to your credit card as a single payment. This is the equivalent of closing the Lightning channel and writing the final transaction to the blockchain, which can also happen earlier if either party chooses to initiate it or if the relevant smart contract is breached, for example, the amount hits the agreed limit. Just the same as your credit card issuer, in fact, if the bartender comes and taps you on the shoulder and indicates that actually you've bust your limit. The bar tab analogy isn't a perfect example because, for a start, it implies only two participants to the transaction, whereas in reality, you can transact over any route between growing numbers of multiple nodes. The network simply takes the shortest path between the two people in the deal. The Lightning Network has grown significantly in its first year, proving the demand for this kind of solution. By January 2019, it had more than 2,800 nodes with active channels. There were 20,000 channels and a total network capacity of over $2 million. So while the idea of the second layer was first proposed in 2015, implementation was made possible by the adoption of the SegWit protocol on the blockchain and Litecoin networks in 2017. Do you need to know what that is in order to use it? Not at all, but it's important. What that protocol did was it fixed aspects of transaction malleability, without which doing deals on the Lightning Network would have been too risky to be practical. Of course, without the real-time security of the main blockchain behind it, the Lightning Network simply isn't as intrinsically safe. It doesn't carry the same degree of protection. But that's why each channel is underwritten with a specific amount of pre-funding. The thing is, even if larger transactions will always be done using the decentralized security of the original blockchain layer, there are so many cases where the balance of risk versus the need for speed supports the use of this particular kind of off-chain deal. It really helps transform Bitcoin into a means of exchange, of true money, rather than just a store of value. It's like the idea of adding coinage or a debit card system to represent the value of stored gold bullion. And it's not surprising, therefore, that Lightning is gaining huge traction in its second year of implementation, particularly for micropayments of all kinds, from tips to rewards. We're really excited to see it realising its potential across multiple applications and platforms in the future, and we'll bring you more news about the Lightning Network as it continues to grow and develop. Thanks for listening to Crypto Confidence. If you like what you hear, please do consider leaving us a review via your favourite podcasting app and joining the conversation online in whichever way you prefer. Full contact details are in the show notes for this episode. And remember, nothing in this podcast or our related social media, nor anything else published by BlockSparks OU at any location, is intended as financial, investment or trading advice. Everything we write or say represents our personal opinions for your information, education and entertainment only. You should not make any decisions based on anything we share with you, not without undertaking independent due diligence and consultation with appropriate professional advisors. Crypto Confidence is all about being smart and informed and making the right choices for you.